Chat's going.
That was awesome.
crazy
Yeah, I
for
love
AJ,
the
man.
entrance. I
Holy
really
shit.
appreciated that. But
Oh, it's nuts. Are you getting delay, AJ?
sorry, I think there's a.
Turn off the YouTube.
I think this is much better now.
Yeah, turn off the
yeah,
YouTube.
yeah. Sorry about that, guys.
No, you're good.
Yeah, so I never want to kill the vibes. You guys always have this good vibe going on
Dude,
the PP show.
you bring the vibe, man. What do you
No,
mean?
but
Your vibe is
feel,
like next level, man.
But I'm most useful when there's FUD. When there's FUD and people really need a reality check, that's when that's when I'll come in and try to save the day.
All right.
But I felt it a little bit now because you guys are starting talking about William and low volume.
Right.
And I just want to make a couple points about that. So the low volume means there's low liquidity, right? And this is actually one of our advantages. I don't want to like falsely give you guys the impression that no, volume's amazing. No, you guys are right. The volume's low, but that's a good thing. I mean, if you look at the apes over at Superstonk, they celebrate low volume days, right? They literally have a ranking of top 10 low volume days, and the lower the volume, the better it is for them. Why? Because it represents a scarcity in the stocks available, right? And that's what we want, like especially in a short squeeze, right? So, William talking about how there's low volume and how that's an issue, I don't think that's something that we need to consider. I mean, scarcity is what gives Bitcoin its value. So the lower the better, in my opinion. And when you come to close your short positions and you need, let's say, 100 million shares to close, you're one specific hedge fund, then you want as someone who owns those shares, you want a low liquidity, low volume environment because it means that they have to basically meet your demands. So that's the first point I wanted to just quickly brush up on. I don't want to sit and pontificate. Like I want this to be a discussion, but I do have some comments that I wanted to make.
Let's hear it, man. We'd love to hear it.
Yeah. So I love this. I love this community. And I want to express how proud I am of the guys and the girls that are holding this fucking stock, like against all odds. I have no doubt we're going to come out of this as heroes. Each of us have managed to pin down these motherfuckers that have been shorting America. Right. And we're doing it simply by buying and holding a company that we love. We're dreaming of a fair and transparent future. And we're prepared. We've proven that we're prepared to see it through to the end, right? Right. And we will get our cut eventually. So if you're invested in Bed Bath & Beyond, I truly consider you to be among the best aware and principled investor. And I also wanted to just, briefly give you guys my opinion on where I think the things currently stand. So not with the company. So look, all you guys and all your guests on the show, you do a great job commenting on that without my input. But where I think it's lacking and is where we are as it relates to the U.S. economy. So the bigger context, and I promise I'll be concise and I'll tie it in with Bed Bath at the end. So the U.S. economy itself has benefited from decades of globalization, right? So you had international trade thriving, trade deals and treaties were being put into law. Third world countries became major superpowers like China. And speaking of China, it's the U.S.'s largest trading partner. And if you're paying attention, you'll know that China is currently going through a full-blown bear market. So their stock market is currently down 20% to date, and it's just getting started over there. And so this is similar also to the downturn that we saw in the U.S. last year, like 2022. And for whatever reason, the markets over there they're moving behind ours. And I think the prolonged COVID shutdown that they had something to do with that, but that's beside the point. So this economic slowdown is happening at a time where we have this intense geopolitical tension between the U.S. and China. They're at all-time highs, right? And so the U.S., it values its own world order. It values the semiconductor chip technologies coming out of Taiwan. And, we saw Elon Musk and Tim Cook recently complete their own, ass-kissing tour in China. And it made sense for them to do that because, they want to keep their business interests intact despite these worsening relations between the two governments. So the point I want you to remember is that the back and forth relationship, the international business that helped enrich the United States and China throughout the 90s and the early 2000s, it's dying pretty rapidly. And so the US is quickly losing this ability to rely on globalization to stimulate its economy. And another point of evidence for this is this growing influence of BRICS. So I don't know if you guys have heard of it. It's this trade organization, between Brazil, Russia, India, and Saudi Arabia and OPEC, who the oil cartel. So they don't seem to be responding to the US's demands to pump more oil into the economy, into the market, sorry. And they've been slowly weaning themselves off this petrodollar. They're agreeing to use the Chinese yuan to sell oil, for example.
Mhm.
So the reality is that the United States is struggling to hold its business influence and economic hegemony
Right.
on the world stage.
Mhm.
And the second largest global trading partner for the United States is Europe as a whole. And in Europe, inflation is fucking out of control. So it's much worse than what we're dealing with here in the United States. So the United Kingdom, for example, is consistent. I mean, Thule will attest to it.
Mhm.
It's consistently seeing double-digit inflation numbers. The European Central Bank is not fucking around with quantitative tightening.
Mhm.
Germany, so the German apes that we have, they'll tell you that Germany has officially announced that it's in a recession. The continent is actively engaged in war, and we're starting to see more trouble in the Balkans again.
Mhm.
So I won't go into politics, but
Right.
the war between Ukraine and Russia, which
Mhm.
no one thought would still be ongoing today,
Yeah, I'm surprised, man.
it's showing no. It's not only not showing signs of settling down, it's escalating. So
Mhm.
the both sides are now attacking each other's capitals, like Kiev and Moscow. And the United States is now agreeing to train Ukrainian pilots on F-16s, and Zelensky's making new calls to join NATO. The reference to the economy is that it's very, very expensive for the United States to continue doing this, to continue in their current role. And I really think that if the war persists for several more years, and I hope to God we do see an end to it soon, it could bankrupt the country.
Mhm.
And no one expects this enormous cost after breaking the bank, trying to especially after breaking the bank, trying to lift the economy out of COVID. So and we all just saw it last weekend. The U.S. just suspended their debt ceiling, so they can continue this rampant spending.
Right.
Look, my point is inflation is not going away anytime soon,
Mhm.
and they're going to continue to debase the dollar to maintain the status quo, whatever it takes. It just keep the printer running seems to be their strategy.
Right.
And most of this political class is too old to give a shit about the future they're robbing us from. So the bottom line is that the U.S. is broke, and it decided to open a new credit card to keep the lights on. And they can't rely on these traditional sources of income, and the situation is poised to get much worse in the future. So the picture I'm trying to paint should convince you that the Fed is not done. They'll
Mhm.
likely continue to rate hike, right?
Mhm.
Inflation is sticking around for a while. So we know a recession, if not a depression, is coming. And we're not in one yet. A lot of people I read online, they think we're already in a recession. Look, you're mistaken. If you think that we're already in a recession, you're simply mistaken.
Mhm.
You can't be in a recession when unemployment is at historic lows. The GDP is still positive. Tech stocks are making new all-time highs. The yield curve that we use as an indicator for recession is still inverted, and recessions begin after the inversion tilts back.
Right.
So you'll know it's a recession when people start limiting their heat in the winter. When we have out of business signs like we saw during COVID.
Mhm.
So it's important to state that whatever happens, I don't think Uncle Sam is going to be bailing anyone out. Okay, this is a flashing warning sign to short hedge funds. The last major recession that we saw in 2008, Obama bailed the banks, and every corrupt banker got off scot-free at taxpayers' expense, and they capitalized the gains, they socialized the losses. We've heard this story before, but I'm pretty sure this time is different. And I don't think that the government has an appetite or even the account balance to bail anyone out. So, I'm not the only one that's aware. You guys are not the only one that's aware. The short hedge funds are aware. They're fucking terrified. And we saw, when some of these regional banks collapsed in March, the government refused to bail them out. The tax, they refused they refuse to bail them out with taxpayer funds. So they're afraid to even use the words bailout. And they ensured that every depositor's funds was made whole, sure, but they had the bigger banks cover the bill. So it's fair to say that we're going to pay for it eventually. And, that's not something I'm surprised. We'll have higher banking fees in the future. But the executives that were responsible for putting the banks in their negligent, shit conditions, those guys were fired. Their bonuses were clawed back. The banks were bailed out using funds that were extracted from other larger banks. So it tells you that the politicians are aware that people are paying attention. People are refusing to be fooled again, to be robbed. They know that people are frustrated, and the 2008 bailout is not going to be, it's just going to be political suicide for them. And no one's going to dare suggest, to rescue a market maker, especially when there's this high stakes election around the corner. So these hedge fund motherfuckers in the market making business have spent the last 10 years plus shorting themselves into a hole that they can't get out of. Ken Griffin's been giving these generous donations to Ron DeSantis. He's moving his headquarters to Florida. He's making massive donations to Harvard University, trying to clean up his public image. And someone like Citadel's Ken Griffin needs a rescue. And there's been some good DD on Virtue Financial as well. But for these motherfuckers, it's the end of the road. And they need liquidity, and that liquidity just doesn't exist.
Right.
So, okay, is there a way I can share my...
Yeah, so click share screen there. Inside a restream, there's like a arrow pointing up on the screen, and you click that, and you can use that. And real quick, I just want to call this out. Chillin' ZX with the 5 memberships, man, for the PP squad, man. Appreciate the love tonight, my man. Be sure that if you guys receive a membership, to thank the person who gave you a membership, and use those fucking emojis, man. And be sure to make sure on your account you can accept them. We also had 1 membership from Ace. Appreciate the love, man. Really appreciate it, fellas. Yeah, if you want to share your screen, you can.
Yeah, I'm trying to. I pressed the share screen button, but I think everything just froze. I don't know if you can see anything.
You are not
The
sharing
window.
anything right now.
How about now?
Oh wait, yes, I have it right now.
Okay, so I don't normally do TA.
Sure.
This is extremely basic. You copy's the master when it comes to that.
Yeah, we actually have them backstage. I'll just throw them in here as well.
That's awesome. Yeah, I just want to give you guys just a quick preview of what I'm trying to convey here.
Yeah.
This whole spiel that I've been going on. What am I trying to say here?
Mm-hmm.
So Bitcoin is a good example of excess liquidity in the markets, right?
Mm-hmm.
Whenever people have more money than normal, they tend to put it into risk assets, and Bitcoin's the prime example. Another advantage of looking at Bitcoin is that it trades 24/7. It trades globally, and there's there's almost no regulation on its trading. So RSI, the relative strength index, is just an indicator of momentum in the market, in the price action, right?
Mm-hmm.
And when you take a look at it, the price on the weekly, you can really tell that human behavior, the markets, they're just tracking human behavior. Our greed and fear index, it oscillates. We have periods where we're extremely greedy and periods where we're extremely fearful, and we go through those periods up and down, and those oscillations are extremely clear on this RSI. So you can identify the peaks. I don't do TA. Again, I'm just trying to make a point here.
Right.
And you can look down to the RSI, and you can tell that during periods where the RSI is peaking,
Mm-hmm.
it's followed immediately afterwards by a prolonged downtrend. And that's also reflected in the RSI. Eventually, it hits a bottom, right?
Mm-hmm.
So here's another top, and here's another top right there. This is the 2020-21 bull market. Yes, 2021. And you can see there was a massive overshoot on the RSI over here, and it was followed by a dip, again reflected in the price. Another peak, again reflected in the price. And then what I'm trying to convey is this is where we're at now. Okay. So the period that we're seeing between these peaks is about 6 months, a year often, right? And what we're seeing now is that we just peaked. Okay, so this is this is the Bitcoin market. Let's go on and look at the S&P. This is the S&P going back all the way till the end of 2021 on the daily. What you'll notice is that, again, whenever you have this region where it's peaking, you see it reflected in the RSI. Here's another peak, it's reflected in the RSI. Here's another peak, it's reflected in the RSI. After every peak, you see this downturn. Where we're at now is we're either peaking or we're just about to peak. And what this is going to lead to is a prolonged downtrend, I believe, given the context that we're in, given the fact that Jerome Powell is full steam ahead. What is it called? How do I stop? Before I stop sharing the screen, I just want to make another point regarding the markets that we're seeing today. So, when you invest in Bed Bath and Beyond, you're essentially hedging against the market. Let me try to find another way to make this point. Sometimes, I overhear, for example, ABC. I love you, ABC, and I highly respect your opinion, and I 99% of what you say is basically I deeply understand it and I agree with it. Sometimes, though, I feel like you mention that the market's green today, therefore we should see Bed Bath and Beyond pump. And I think that to correlate this positive sentiment in the overall market with the price of Bed Bath and Beyond is opposite to what we should be doing. In fact, the market makers, they're literally lifting this market and the hedge funds using the hedge funds that they operate with 7 stocks, right? These 7 stocks include Microsoft, Amazon, Tesla, Nvidia, Meta, and what they refer to it on channels like Bloomberg is bad breadth, right? It's just a play on words. It's the idea that you have this very risky, very dangerous concentration in the market, and it kind of happened all of a sudden. Everyone's all of a sudden crazy about AI, and so I just want to give you guys my perspective on this. So, I work with biological intelligence. I study biological intelligence, and so I actually collaborate with AI researchers as part of my day job. And so I'm in the industry. I understand the nuts and bolts of the industry. And as someone who's not speculating on AI from an outside observer, as someone who's actually working with the technology, I can tell you that the rate at which the technology evolves does not match what the markets are expecting. This is what you're seeing is the most obvious example of a financial bubble, and it's literally some of the fakest things. The price action is irrational. It doesn't take a genius to see it. Microsoft is having a second all-time high, a second peak. Meta, look how fast Meta has been going up. It's basically a vertical line. Nvidia just had another all-time high today. So what's happening is the market's being artificially propped up, and we're reaching a breaking point, a tipping point, as you can say.
Right.
And when you invest in Bed Bath and Beyond, you're investing in a sense, you're hedging against that.
So let me ask you this: do you believe that IEP is connected? Is there, because if we look at the tinfoil and all this shit, man, it's like IEP is falling for a reason,
Yeah, it's hard to say they're not connected.
Right.
I don't know for a fact. I know so I don't fully understand, how swaps. How they're using swaps to
right.
Because sometimes it seems to correlate, and other times it doesn't seem to have any correlation whatsoever. So they seem to be able to trigger it, untrigger it, but it could just be an illusion to us. So I don't want to speculate on IEP's price or that. I just think it's amazing that this tipping point that we're seeing in the market it seems to coincide just when we're about to get disclosure from the company about the stalking horse and about the sale of the company itself.
Right.
And it's just when GME is starting to have 5 straight weeks of green, and GME is also showing extremely positive results on their balance sheet. So all I'm trying to say is anyone telling you that shareholders are going to be wiped out can kindly go fuck themselves, as far as I'm concerned. You know, Bed Bath and Beyond requested an extension because multiple stalking horse bidders are placing their bets. You know, so the assets are so desired, we're having an auction before the auction, and that's deep fucking value.
Absolutely.
So any
AJ,
scenario, yeah.
sorry,
Yeah.
my man, I don't mean to interrupt. I just want to kind of get back to what you're. Are you basically kind of saying that before every recession, every depression, every major crash, whether you go back to 2008 or whatever, there's always a lift in the market before that initial crash?
Yeah.
And even
melt up before the meltdown.
Melt up before the
Right.
meltdown. There's a term for it. Yeah.
And so even Reverse Kramer was on a couple weeks ago saying we're about to lift off market-wise. And my initial intuitive thought was, obviously, everything he says is polar opposite. But generally what happens is the market makes most of their money from retail, because as humans, we have this fear and greed thing. And if they can shake us at the right timing, the market can make a lot of money based on, and that's kind of opposite the way BBBY and we play, because we hold and hold. So they can't really shake. And that's where, so what I often see is before a major crash, you promote and market the market, and especially with NASDAQ and tech right now, everything's kind of on a lift off. And then next week, when we hit this bubble and start to crash, it's generally the public and the retail that are last to hear of it and end up holding the bag on such, right? And that's how the market makes their money. So would you say that we're past that tipping point now, that we're literally going to kind of downward trend?
I think so. I mean, you saw the RSI indicator. It showed that we're literally at a peak, right? We're either at the peak now, or we will be as soon as next week. So I think that there isn't enough liquidity to keep that charade. There isn't enough liquidity to keep people interested. Like this whole AI, like mania, this manic episode that as a society we just experienced, it came out of nowhere. Actually, if you look at many of the stocks for these major companies, they all seem to have pumped literally on New Year's Eve. Go back, look at the charts.
Yeah. Can I sorry to interrupt. PP, can you show this thing? Because we are talking about this, SPY and market crash stuff. Like this is something that I kind of like talk to. We touched this last time with the mooncake in my stream. But I just want to quickly just bring this up because you guys talking about it. So yeah, we just so basically there was a gap here at a how much was this? At about 420. So we just actually filled the gap yesterday, I think. When was this?
How
Friday,
many fucking goddamn gaps are there, man? Fucking there's
I'll
gaps
show you.
every
Hold on.
day, it seems, man.
So
this
is pretty like crazy right now. Yeah, so I agree with AJ, man. So
I
yeah,
swear, every
420.
day,
So
every
yeah,
day
we
it's
filled the
filling a
gap. Yeah, 420, and we went up above the gap. But here's the thing, guys. There's a lot of gap down below, and then this is the blue chart is actually .com bubble chart, and it's actually very similar. And then the interesting is I was watching some other guys, some like professional like trader stuff, and he also mentioned about .com bubble chart, and then it's interesting he saw similar things anyway. So when I brought this psychology of market cycle. The interesting is actually believe it or not, I believe that we are actually here, completely, and then I think we're about to see this a huge market crash. And then here's the thing, I use this is weekly, by the way. So when you look at this blue line here, moving average, when this thing touched the candle, so this is a so whenever this touch the candle, it's gonna crash really hard. So this is a coronavirus 2020. And this is, I think, 2016, 2014. Every time it touched the blue line, 180 days moving average, it crashed. So it's coming up, for the chart right now. So yeah, man, I mean, I don't know. Yeah, it's going to be pretty crazy. So in my opinion, FOMC, as you guys know, FOMC meeting is coming up, right? June 4, June 14. So I wanted to bring this up today. Because I think June 14, if I think Powell is going to hinting maybe or showing signs of lowering interest or something like that. I think this whole growth stock, meme stock, whole, growth. It's better for the growth stock, right? So with the sign of low interest rate, it's gonna grow. We're gonna go BBBY, whatever AMC, all the meme stock will maybe go, and then the Nasdaq, like they're pumping like crazy right now. When you look at Nvidia, it's crazy. I think a lot of institutional investors are selling actually Nvidia. They're trimming down. So those will come down and all. Right now, what brings the market is actually there's only like 5 big tech stocks. Like Facebook, Meta, right? Like Nvidia. Those are the one that bring up this SPY, and if they start to crash, everything will crash. So yeah, man. Yeah, that's something I wanted to just
emotional
add on.
damage with the $2. Brand, tell us about your chlamydia. AJ, man, if there's anything else that maybe you want to add in, we'd love to hear it. I love having you on the PP show, man. Like
thanks, man.
you know this, man.
I
like
love
you're fucking hype, man.
Yeah. I hope to always be hype. I don't miss a minute of your show.
Right on.
But again, I like to come on when I feel FUD.
Yeah.
Because that's when I'm most useful. But I do have a couple closing.
Sure.
Just one closing statement. So, the day that the Teddy trademarks were officially filed.
Yes. That was August 12th.
August 12th, 2022.
Yes.
Was the same fucking day that RC tweeted at least her cart was full with the moon emoji.
And then 4 days later
he afternoon.
Yeah.
Yeah. But also later that month, he just decides to change his SIG codes for RC Ventures to match Bed Bath and Beyond.
Interesting.
Just coincidence. And he literally
that was probably an error, but anyway,
a coincidence. And he literally fucking he winks. When he hears a reference to shorts, he literally fucking winks. So you're either really stupid not to see what's going on, or you have an interest against the stock surviving.
Right.
So to me, I'm already under the assumption that I'm coming out of this a millionaire.
Love to fucking hear it, man.
I'm already looking up apartments and planning my next moves. And
excellent.
Something I want to mention is it's not a good thing to see a recession. Even though that we're hedged against it by having our investments in Bed Bath and Beyond, people are going to get hurt. So it's not something to celebrate, but it depends on what we do with our money. So understand, where this is going. Also, when you do make your gains, don't rush in too much to get back into the market. My suggestion is, this is not financial advice, obviously, but what I'm doing is I'm going to be waiting a certain period of time, and at that point, getting back in at the opportunity. Anyway, thanks for having me on.
Excellent.
And love to see you guys.
We loved having you, man.
Last time it was SF's birthday. Happy belated birthday, and take care.
Hey,
AJ, can I respond to something real quick?
AJ's so popular, man.
Yeah, absolutely. What's up, Grant?
Yeah, so I just wanted to respond to something that you said. The NASDAQ has been literally kicked down absolutely curb stomped for the past 2 years. And you mentioned that it's only been signaling a recession into this year, maybe, and possibly into next year. But the NASDAQ has been shit down 90%. So I wanted to comment on that. And then also, in terms of where the market's at, I feel like we're at the base of where a recession would be, and then we're actually starting to recover. So that's just something I wanted to comment on.
It's simply not the case. You have a recession when unemployment starts to go up. The last time we saw unemployment at the rates that we're at now was the 70s. Not only the unemployment, the inverted yield curve. So this is something that you have to go back to. The inverted yield curve tells you when to expect a recession, but the recession never actually occurs until the curve returns into its correct directionality. So we're still inverted. In fact, we're the deepest inversion that we've ever seen, at least in the past 40 years. So the recession hasn't started. A lot of people have that misconception, and you know, I'm not bearish. I'm just looking at the data and interpreting, you know, what we can expect to see. Trust me, we'll all know when the recession hits us. You don't have a recession and Nvidia goes to $420.
Yeah, no fucking chance.
That's not a recession.
AJ,
Yeah.
AJ. So the Chinese market, like their index, like over the past like 10 years, hasn't it been? It looks like it's been like just chugging along sideways, right? But yet they had all this growth and everything. Like, I mean,
it's certain sectors. Yeah, certain sectors are in the Chinese. So the Chinese market, the past 3 years have been an anomaly because of COVID, right? So it's not something that we can relate to.
But even before that, like 2000, from like 2000, when did the U.S. market start recovering? Like 2010 or 11 or something like that, right? We were on this epic bull run, and like if you go back on like a China, like the main China ETF, if there's a main one, you can go back like 10 years and everything. It's like they didn't experience any of that kind of growth that the U.S. did. I was actually talking to a guy that had kind of a theory that you know, that the U.S. market is somehow actually suppressing the Chinese market, and
I'm not surprised. Yeah,
I don't know. It just seems really strange. I mean, obviously, like it seems like they've grown too fast with the buildings.
Yeah,
they're, you know, knocking down buildings that they're not even filling people up with. But for their market to just go sideways like that, I just don't.
Right now, people are speculating India to be, you know, the next country to boom the same way that China has boomed. So if you're looking into an international market, you know, India's a great place to consider. But China, yeah. Anyway, sorry, I'm just going on a tangent. Sorry, guys. Enjoy your night.
Hey, AJ,
Thanks, AJ.
Thanks, AJ.
AJ, please let me, please.
Love you, Fleur. Love you, Fleur.
Oh,
bye-bye.
I've been staying here for 3 hours. No.
AJ's a very popular man, man.
He even acknowledged you. Dang, that's cold-blooded.
He said, "What's up, man?"
Dang, cool.